Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, March 4th, 2009. We begin in Australia, where GDP data for the fourth quarter came in worse than expected, showing a 0.5% decrease. Expectations had been for a small positive gain. It was the first time the Australian economy contracted in 8 years. The major drag was a decline in inventories, which can suggest that the overall economy may be slightly better than the headline number. On the year, growth was up 0.3%, also far lower than forecast. A second release from Australia showed that the services sector contracted at a record pace in February. The index fell 8.8 points to 32.2 as sales, new orders, and employment all slumped. The Aussie-US dollar pair fell in the wake of Australia's data, retesting its one-month low near 0.6285. From there, though, the pair rallied 200 pips to the 0.65 level as China announced they would consider a new $585 billion fiscal stimulus plan. That announcement boosted stocks around the world that have been depressed the last 5 sessions, and this helped to boost risk appetite in the Forex market. The Aussie reclaimed its level from Thursday, breaking above a line that had turned from support to resistance. The Aussie rose 260 pips against the yen as well. The Euro-Yen pair surged 270 pips overnight as European stocks saw big gains, with companies exposed to China seeing the best increases. The sense of risk appetite today brought the pair back to its levels seen on Thursday, before global markets saw a significant downturn. In the UK, the services sector showed a 10th straight month of contraction in February, though the speed of the contraction slowed somewhat. The PMI rose to 43.2 from 42.5. In a second release, the BRC shop price index saw inflation climb at an annual rate of 1.9% for February, a modest increase from the 1.1% annual rate seen in January. Higher food prices were the main culprit behind the rise in the index. The pound-dollar pair fell to the 1.3980 level to start the global session, but then was bolstered by the rise in risk appetite following the Chinese fiscal plan announcement. The pair rose 150 pips to retest the 1.4150 area, which has become an important level as it has turned from support to resistance. In the U.S., the ADP employment change showed close to 700,000 non-farm private jobs lost in the month of February, while January's data was revised lower by 92,000. The data undershot forecasts of a smaller decline and sets the stage for a weak non-farm payroll report on Friday. In a second release from the U.S., the ISM non-manufacturing index declined to 41.6 in February compared to 42.9 in January, showing an acceleration in the pace of contraction in the sector. The number came in slightly above expectations, but that does little to stem the unease from a 5th straight month of contraction in the services sector. Interestingly enough, the employment index increased, though it still finds itself below the 50 level that separates expansion from contraction. The euro-dollar pair hit a low near 1.2450 after it fell below support at 1.2550. The euro managed to pair that decline and most of its fall from yesterday's session on the back of increased risk appetite today. Currently, the pair is testing its downward sloping line of resistance that has been set up in the last 2 weeks. The euro breached that line to set an intraday high near 1.2650, a 200 pip climb from today's low. The dollar-yen pair increased to 99.50 after it broke above recent resistance near 98.55. The pair stalled, however, after its initial rally, which came during European trading. The rise in risk appetite helped boost the Canadian dollar, which has been pressured recently as a result of weak oil prices and weak economic data, including a disappointing Canadian GDP release. The US dollar-Canadian dollar pair tried to test 130 yesterday and at the start of today's global session, though fell short by about 35 pips. Following that high, the pair slid 200 pips in today's session, bringing the pair back to an important level at the 1.2740 level. Tonight, Japan will release data on capital spending, while Australia posts its building approvals and trade balance figures. Overnight, Germany reveals its retail sales, and the Eurozone unveils its second release of fourth quarter GDP. Tomorrow morning, both the Bank of England and the European Central Bank will decide on interest rates, with both expected to lower rates. Also tomorrow, the U.S. will reveal its weekly jobless claims, final versions of labor costs and labor productivity, and its factory orders. Canada will post data on building permits and its IBPMI. And that wraps up today's edition of our broadcast. Thank you for joining us here at CMSFX.com, and happy trading.